What's up, everybody? Welcome aboard to Bubba's Bottom Line, and it's me, Todd Bubba Horwitz. What's going on, everybody? Hope you're having a great weekend, and some wild football going on, and some crazy games in college if you're a fan. Oklahoma State got drilled by TCU. Some interesting stuff going on. It was a wild one. Penn State almost lost, and anyways, so. As we look back at the last week, the Fed week, the shortened holiday week for the Jewish holidays, the light volume, guess what? Markets were up. Oh my God, once again the markets are up. And of course, one of the things that we often talk about here is why. And of course, the why is because right now we're in that overall chase for yield, okay? This is not a spot that you were familiar with, but when you put investors in place where there's nowhere else to go, they're going to have to chase the stock market. So again, we're not trying to tell you that the stock market is not going to go higher. We're telling you that the likelihood of this extension or a continued move here is rather remote when it comes down to it. But we're not going to get in the way of it. As you looked at some of the action last week, look at the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google. A couple of them made key reversals to the downside on a weekly charts. So that would indicate that they think that we might be ready to be perking down. Now, again, I'm not recommending anything major here short. I'm not telling you that it's time to get short. I'm telling you that it's time to be careful, okay? We're not going to try to time the market. We're not going to try to get anything crazy. What we are telling you to do is we are telling you that simply it's time to be more cautious. Again, I'm personally not cautious because I hedge my portfolio anyways. So I'm not worried about adverse movement. In fact, I'm looking forward to it so that I can buy more. That's one of the programs that we offer at Bubba Trading. But in the meantime, for anybody else that's not hedging, you want to just be prepared. And it doesn't mean sell today. It means understand that there's going to be a sell-off at some point. And today, while the markets are great, you should be making that decision on whether or not you're going to sell if they start to sell off. And if they are, where is your exit point? And make that exit today. Don't make it tomorrow when it's too late. Make it today so that you understand that's part of a good solid trading plan. Again, everything we do comes with the fact that you should have a good solid plan together to help you. Okay, it's pretty simple. Now, looking back at last week a little bit, again, markets were torturingly higher, okay? Especially if you're a trader, there was no volatility, not good. But if you look at a couple of the good things, or at least a couple of the good things that are being told as good things, and I would beg to differ, okay? The Fed, all right, the Fed decision. Was it good or was it bad? Well, first of all, our good friend over at the Federal Reserve, Dr. Janet Yellen, kept using the word idiosyncratic. I counted an over and under of 12, okay, in about a 20-minute speech. Now, I don't like speeches. I have to go get the dictionary out to listen, to try to figure out what the hell she's saying. But I think it was the usual double talk Fed that had no idea of what they were going to do next. And I have to ask this question, and we'll cover this later as well, but why can't we raise interest rates if the economy is as good as they say it is? It's always the interesting conundrum, okay? You tell me one thing and you're doing something else. Doesn't make a lot of sense. And then corporate earnings outlook. Now, of course, the corporate earnings outlook is good. Well, and why is that? Well, first of all, corporations are holding a record amount of cash because they're not spending it on anybody. They're not spending it on anything, okay? They're accumulating it, all right? So you think that it's great and the earning numbers will look good, but is it really great? And again, not to be contrarian, but I beg to differ. People are not working. We talked about last week, real wages are falling, okay? So what good is it that the small or the minority is holding a record number of cash? What does that do for me and you? That's what I'm worried about. I'm not worried about the rich. I'm worried about the middle class. That's been always been my bandwagon since the beginning. I'm worried about the average pop and mom and pop, whatever, and worried about that. Okay. And then of course, the bad from last week would be existing home sales missed again. All right. Well, they keep telling me how cheap rates are and interest is everything, and we're selling. Where? Again, this goes back to if the bank will not provide liquidity, okay, where am I going to go? How am I going to get the money? So this is something that, again, it goes back to the same story. Notice how these always relate back and forth. And then you've got rail traffic declining. What does that mean? Okay. Bueller? Anybody? Well, no, just kidding. Rail traffic means very simple. There's less goods being shipped. Okay? Rail is a huge shipping point. There's less being shipped. Why? Because at the end of the day, we're not making any new product. We're not bringing in any new product because we have no sales. We have retail that's in the toilet. Right? Again, you know, it's like, okay, Best Buy's in trouble. You know, all of them are in trouble. All right? And because there's Amazon, okay, because there's other online providers, because logically, unless you want to make a day trip to go out and shop with your family or whatever, or, you know, with the boyfriends or girlfriend, whatever you're doing, okay, then what do I need retail for? What do I need a store for? So I can try it on, okay, so I can touch and feel and look at it? Well, one thing nice about, for example, Amazon is I can send it back if I don't like it. So should I waste the time to drive, let's say 25 minutes or 30 minutes? You have to find a place to park. Okay, maybe the weather's bad, maybe it starts raining, right? And then go to the store and walk around, right, and look and find out that most of the stores are carrying a much skinnier inventory, so they might not even have what I want. And then have to drive back home, maybe walk in the rain, right, and then come back home. So I just wasted, let's say, 2 hours, all right, and maybe a couple gallons of gas. So I'm paying about $5 more for a product. Okay, that I can buy on Amazon. They'll deliver it. They'll take it back. I don't have to get wet. I don't have to go out and park. I don't have to do anything. And I get it delivered to my door. So what's a better way? All right? And this is what I think has changed. And not because it should change, and not because it shouldn't be, we shouldn't take advantage of sometimes better pricing, but what you've done with your retail ice age, what you've done with your Fed policy, what you've done with this ridiculous economy is you've shut out the middle class that, you know, when you think about it, if I waste 2 hours and $5 or $10, right? And then if I go, I might go to lunch or whatever. But if I waste, let's say, simple, let's say I waste $5 plus the time, okay, and go out to the store. Well, $5 buys me a Happy Meal at McDonald's plus. I mean, almost any restaurant, any fast food restaurant, I can eat a full meal for $5. All right. Now, again, you're laughing and saying, "Hey, that doesn't make sense." What do I worry? I'm not worried about $5. Well, you know, if you're not working, you're worried about $5. All right. So these are the problems that we have and that continue to grow among us. Not to mention that America's going broke. Okay. I mean, at the end of the day, just look at the debt to GDP. Look at the amount of debt we have in general. Where is this money going to be made up from? Okay, this is something that is not going to be made up so quickly. This is becoming a much bigger problem. debt is the death of all markets eventually. And when you look at the debt that we have created, my God, where did we think how did we think we're gonna pay it back? And yet now we're gonna have to create so much more debt. Now again, obviously for very sad reasons. You know, some major hurricanes, some major damage. But do you think that it's great and it's healthy that we are at a record amount of debt? And the debt comes from those who can't afford to pay it back. As you know, I have Dr. Bob Schwartz on my radio show, who's an economist from London, and his opinions are they're going to have to write down this debt. All right, now there's no banker; they don't have the stones to go ahead and write down this debt, but it's going to have to be written down. There's no way it's going to ever be paid. So now you've got corporations holding records amounts of cash. All right, that they've accumulated so they can buy back their stock. They can do all the things that, once again, don't benefit you and me, okay? Again, not that I'm against them. I'm just saying that what they're doing does not benefit the growth of the economy. Every company should be concerned with the growth of the company. But, of course, they are very short-sighted as well. They're like the banks and like everybody else. They're in it for just themselves and very short-sighted about where we go next. Okay, because by accumulating all that cash and not reinvesting in your own company, eventually the merry-go-round has to stop. Okay, and of course that makes you much weaker because you're well behind in innovation if you're not trying to keep up. So we've got all these things that tie into America's broke and nobody cares. And that's, of course, if you look at the stock market, nobody cares because we continue to go higher into the face of everything that is bad. In the meantime, this is Bubba's Bottom Line. Make sure you catch the Bubba Show every single day, 2 to 3 Eastern Time at libertytalk.fm. Okay, help a brother out. Take a listen to the show. I think you'll enjoy it. In the meantime, I'm going to step out of here for a break, and I will be right back with more of Bubba's Bottom Line right after the break. Bubba's Bottom Line, we're coming right back to you. Welcome back to Bubba's Bottom Line, and it's me, Todd Bubba Horwitz. Great to be here with you. And, you know, we talked a little bit earlier about debt to GDP. And, you know, I think if you look around the globe, you'd probably be nauseous, right? I may have to maybe start sending out barf bags. Maybe I put my little logo on the front of them, right, for debt, right? So, Japan, 243% of debt to GDP, okay? That means they're spending 243%, they're taking 100. Not a good ratio. The United States is about 100. It's about even. Not a very good ratio. Again, this goes back to everything that we talk about from a fiscal responsibility, okay, is trying to balance all those numbers. But when you continue to pour money in, like it doesn't matter, okay? It doesn't matter that the Fed creates more money to reduce the value of the money that I'm holding in my pocket. It doesn't matter that we see all these crazy things going on and that we have debt to GDP. I mean, Greece, which is already in trouble, Portugal, Belgium, Spain, France, Brazil, they're all in trouble. And nobody cares. Again, this goes back to I said America's broke, nobody cares. The world is broke and nobody cares. Do we really think this is just gonna like disappear? Do we have Houdini coming back from the dead who's gonna perform some magic tricks that's gonna make all this debt disappear? I mean, really, is David Copperfield coming to the show? I don't know. It's totally laughable that everybody actually thinks that it's just gonna go away. This educational debt, this student debt, auto loan debt, it ain't going away. Right? Already auto sales are getting hammered. They're already lower. Right? Debt is building. People aren't working. Where are they going to pay these things? You know, when you use the greed, which is what many of these people do, to sell people on the free money, and I'm not talking about free money from the Fed. This is when you sell somebody on 90 days same as cash. You know, 12 months, no interest on your credit card. Of course, that's a little bit misleading because you pay a fee. So it's not really interest, but if you pay a $300 fee, okay, and let's say you only get 30,000, I mean, excuse me, 3,000, all right, you pay 300, you're paying 10% right there. But their whole objective, which is really the sad story, is hoping that you don't pay. Because then they get to ring that register at exuberant, that's not a good word, at excessive interest rates all the way back to day one. And where are you at now? Now you went out and bought that new TV set they convinced you to buy at $2,000. Now you're paying $4,000, and you're never going to catch up because you didn't have the money in the first place. Which is why I warn everybody before you run out to buy that new appliance that you don't need, okay, to impress somebody you don't care about. Think about where you're going to pay for it, okay? Now again, we should never, especially in today's world, say, hey, I'm going to get a job, I'm going to make more money, all right? Because that's not happening so fast. Now, indeed, there are a lot of jobs out there. Okay, the problem is that there's not enough people qualified for the jobs that are available. There's too many old people like me, okay, that aren't computer savvy, they couldn't do a lot of this stuff. So I think that's a problem, all right? Now, of course, we always make a little bit of time to talk about Bitcoin and the gold markets and the currency markets. And, what do we see here? Well, we saw the Fed announcement bring a big rally to the dollar, to bring a big sell-off to the euro, but that's already kind of reversed already. But I think the interesting thing here is the action in Bitcoin. Bitcoin got down under 3,000. Now it's back over 4,000. And you've got everybody trying to convince you that it's a bubble. Now again, let's go a little bit of history here. I didn't understand Bitcoin from the beginning. I don't totally understand it here now, but my understanding of it now is that it may be a little bit overpriced, it may be a little bubblish, but I'm going to tell you this, that it may not be Bitcoin, but one of those, at least one of these, I don't know how many there are now, there's a lot, but at least one or two of these cryptocurrencies will be in existence for an extended length of time and become a real asset class. And I think one of the things that we look at here, though, and that makes sense and makes a difference, is that the competition for gold, it gets, I think, reduced. I think people go into gold, considered a safe haven asset. Now again, I call it a commodity, but it is a hard asset that can be somewhat safe haven from, again, from destruction. We know it's not a company, the secretary is not going to get caught sleeping with the manager, the boss, and there's going to be a lawsuit. It is just a hard asset that I'm going to own, okay? So I like that. And it is one I can touch and feel, which I like that. Now, that's one of the things I don't like about the Bitcoin. However, the owning a free market currency in Bitcoin, which is truly a free market, there is no interference, there is no Fed, it is strictly driven by price discovery and a true market, okay? That's what I want to see, is a true free market, true price discovery. And that is what Bitcoin and all the others are driven on. They're open 24 hours a day. They bid and offer all day long. People are trading it, but whatever. So that gives you a free market. Now, the technology that delivered all this, I guess it's called the blockchain, is already in use with many, many places. And my understanding, again, I don't understand it completely, but my understanding of it is it's quite a fascinating technology. And I've told you before that China and Russia already use it. And Jamie Dimon came out with his BS and said it's a bubble, or it's a Ponzi scheme, whatever he said. Look, Jamie Dimon may be a great CEO. I don't know personally, but Jamie Dimon stole Bear Stearns right from underneath the stockholders. Jamie Dimon is part of the central banking system, which is not very good in my opinion. And Jamie Dimon is somewhere involved, in my opinion, again, these are more spec facts, but is more involved in some of the underworkings of some of these things. And he's trying to convince everybody that they should go lower and that they're not very good. And I think this is one of the problems that I find, is that the big banks tend to try to mislead the average investor. And when they do that, that typically creates a lot more problems than good. And that's where I think it's a bigger problem. again, I don't know for sure. Okay, I am going to buy. I mean, I'm saying this for the last couple of weeks, but I'm going to get in. I just had trouble opening an account. You know, it's above my pay grade to understand the technology to even get there. But at the end of the day, it looks like it's the real McCoy. It looks like it's something to play with. It looks like it's something that can grow. And I think certainly among younger people, it's something. Now, my son actually, who is going to work for Edward Jones, or is working for Edward Jones now, said that he was going to buy some for himself. Now, again, why would some, what do they think? Well, again, they understand a little bit. And this is something that, again, gives you the true free market to trade and to hold on to your currency. It also allows you to be, if you want to be more mobile with your money and be able to, go to Japan, go to China, wherever you want to go, you have always a bigger sum of money to deal with. Like you can't carry 10,000 cash, or you're not supposed to carry over 10,000 cash out of the country. Okay, so these are things that work. But again, we go back to this whole Bitcoin bubble deal. It could be a little bit of a bubble. Again, I don't know that it's not a little bit of a bubble, but I think it is here to stay. I think, in my opinion, I'd say the stock market is a bigger bubble than Bitcoin. Okay, that's just the way I see it. This is Bubba's Bottom Line. Todd Bubba Horwitz. Make sure you check out the Bubba Show every single day at libertytalk.fm, 2 to 3 Eastern. I'm going to step out here a break, come back with my commentary after the break. Bubba's Bottom Line, Todd Bubba Horwitz. We'll be right back. Welcome back to Bubba's Bottom Line, and Todd Bubba Horwitz here. And, of course, to all my Jewish friends and people that celebrate, Happy New Year. And, of course, we've got the Yom Kippur coming up next Saturday. Okay, so let's get right into it, all right? My commentary, I obviously follow the Federal Reserve. I follow their meetings. I want to know what's going on. And it's beyond me how we can have an organization such as this being the most powerful in the world. I mean, the central banking system, the Fed, is actually more powerful than the president. Because he or she who controls the money controls the game. Okay? Remember, it's always about the money, right? So there was no question that the Fed was not going to raise rates. Now, my first question here is why? Okay? If the economy is as good as they say it is, now they keep telling me what a great recovery we've had. Now, if there's anybody out there that thinks we've had a great recovery, please email me at bubba@bubbatrading.com. I want to hear from you. Again, I'm not against you. I want to hear. But I ask this question a lot, and I never get a positive response. So if you do think that's the case, email me. Again, I'll discuss it. I'll put it on this show or my radio show. I'll talk about it. I'm not going to tell you you're wrong. I don't know. But what I know is what I see. And what I see is not very good. Closing restaurants, closing retail, people not working, people not making enough money. Okay. But the Fed and the government, they keep telling us how good the economy is. We're past the recession. Well, of course, you know that I say we never left the first recession. Somebody asked me the other day, well, when do you think the next recession is coming? I said, we haven't gotten out of the last one yet, so what am I worried about the next one? Now, this continuing battle to get inflation, $4.5 trillion to try to create inflation. Why did they need the $4.5 trillion to create inflation? What were they trying to accomplish? Well, the first thing they were doing is they were bailing out the banks. I don't give a crap what they say. They're bailing out the banks. They're giving them the money. All right. Now, it doesn't work. You don't get inflation when money doesn't go to work. Monetary policy is very interesting. We call it a lot the velocity of money. And if the Fed would have done their job properly, they would have created the velocity of money, which would have created natural inflation, instead of what they're trying to create, which is artificial inflation. And the problem with their version of inflation is they want to inflate my assets so I can pay more taxes on them, so that I can pay for the stupid debt program that they built and the $20.5 trillion that we're in debt right now. So that's a fallacy, because again, if it was so good, we would be raising rates. There wouldn't be a question here. But they have made room for a lot of these peer-to-peer lenders, and you hear them advertising every day. You don't think they're paying that big money for advertising because they're not getting people to call them that don't need the money. I mean, you really? Okay. So now, all right, so Janet Yellen comes out with her big meeting, big speech, and we're not going to raise rates. No surprise. And she talked about how they're going to unwind the balance sheet. They don't have to unwind it. They can let it. They can let the bonds go to maturity and take the money. But we're going to let like paint dry. Well, is that free market? Is you manipulating your balance sheet to fit the market? Is that free markets? I don't think so. Again, this is the problem. We have gone away from free markets, which leads me back to the Bitcoin for a minute. That's a true free market. You name me one other thing in the United States of America, or across the globe, other than a flea market that is truly a free market. We don't have true free markets right now, right? Right now, you have markets that are dependent on interest rates. Housing, interest rates go up, houses go down. Interest rates go down, houses go up. Okay, it doesn't change. It's a washing dollars, right? Fed giving banks money, federal funds, borrow. Federal funds, take it from column A, give it to column B, no risk, arbitrage my money. So that's all that they've done there. Her speech was so confusing that what she was talking about, I don't think she knew what she was talking about. I think she's just throwing out a lot of big words. And I think this is another one of the bigger problems, okay? The Fed does not, I don't personally believe the Fed ever worked. But certainly the Fed does not work today. The Fed is a joke. It needs to be eliminated. The overall policies that they use are stupid. Think about it this way, right? They are trying to dictate to you and me from academia, from a book, okay? A book that was written by a dope. We have another person. In 1928, John Maynard Keynes said the following: we will have no more financial collapses in our time. Okay, then we had 1929 and 1937 and a bunch of others. Janet Yellen, I believe, said the other day, there'll be no more financial collapses in our time. Oh, really? Okay, look, I guess this is the first time ever. But we have built a bubble. The Fed has built a bubble, which is what they're good at. The time has come to eliminate the Fed, audit the Fed, whatever we're going to do, but they need to be reined in and not reined in by Congress, who's going to figure out a way to spend more money. That's the problems with what we have here. And this is when you don't have a free market, because interest rates should be higher based on all of the peer-to-peer lenders that are out there, based on some of the small subprime lenders that are out there. There is a demand for money. The banks have to liquidate it and free it up and give it to people at reasonable amounts. They won't do it because, of course, they don't have to. But that's the problem. The Fed's the problem, and that's the way I see it. And this is Bubba's Bottom Line. Todd Bubba Horwitz. Thanks, everybody, for being here. I appreciate you. Make sure you catch the Bubba Show every day, 2 to 3 Eastern. In the meantime, until Monday after the close, Bubba's Daily Update. Have a great day, everybody. Thank you so much. We'll see you later.